Welcome to Major Money Matters. My name is Major. I'm a mortgage broker powered by Edge Home Finance. And welcome to the channel where we discuss mortgages, money, and more. And today, welcoming my friend, fellow mortgage broker, Hunter Bolling from the HB Mortgage team to talk over some things. Some things we talk about all the time, but we just wanted to turn on the camera and share some information with people outside of our phone call. So Hunter, thanks for being on, man. Great. Thanks for having it.
Oh, man. Thank you for having me. Honored to be here and looking forward to our conversation. Even though this is not on a phone call today, it's getting recorded.
Yeah, it's kind of like us just talking on the phone with some other people just listening in and watching us have a talk. So let's talk about this, man. Let's start off talking about, we wanted to talk about, we were talking about the amount of money that's out there for people to buy homes. Really, and there are multiple products where people can get savings on their closing costs, down payment assistance, etc., things like that. So I want to start talking about that. But in order to not spend money on buying a home and on closing costs and stuff like that, we first have to talk about how to save money on closing costs specifically. So can you talk about what you're seeing in origination fees? Let's talk about that.
Yeah, so origination fees have been a really big player right now. Margins are razor thin, so you're starting to see a lot of mortgage companies unfortunately start to close doors or having major layoffs, right? There's a lot of things that are moving. And because of that, we are really trying to adjust and help people understand, those referral partners, those real estate agents, those clients saying, hey, you don't have to pay an origination charge. And realistically, a lot of loan officers that are out there in the retail world don't know that there is something called no origination charges. I didn't know that in my years previously. So, it's a hard thing for people to grasp, but, we've seen a lot of things recently. You're paying origination charges and likely paying to buy down the interest rate as well. With the resale lender right now, or even banks, you're starting to see a big influx in cost. And that's because of these razor thin margins. So because of that, being able to work with that broker not only saves you up front on those origination fees, but it's also going to help you save on rate and give you that comparison because of it.
Yeah, Hunter, many of us, and both of us get loan estimates from people send them like estimates and say, hey, this is what this loan officer gave me, this is what this company gave me. And you and I used to be retail loan officers before we came over to the broker side. So on the retail side, there is, there was us, we were out doing the work generating the business. But at that company, there was, a vice president, a regional vice president, a branch manager, a team leader, and all of these things. And all of those people had what we call in the business overrides on the loan that was done. And what the originator sometimes does not understand is those overrides actually increase your interest rates. And in order for you to stay competitive in the market, you can't increase the interest rate anymore because you have to give the appearance that you have the same rate. Yep. So what you do is you charge origination in order for the originator, the person who's doing the loan and doing the work, to actually make money. You have to charge there. Now, and everybody gets their rates. Everybody starts off at wholesale, but then the retail side adds all of this layers of stuff. Oh, buildings and stuff like that. You and I are both having this conversation from our home office,
right?
Which we don't have overhead,
right?
Stuff like that. So we don't have to pay a monthly for, a building or something like that. And that building cost, you see that big, pretty building at, can I call out your previous employer?
Mr. Cooper.
Yeah, so I'm driving down the interstate. There's this big, beautiful Mr. Cooper building on the side of the road in Texas.
635.
and that costs money every single month, and that's added into the overhead, that lights and everything. And that's what people don't understand about origination or about how rates work. Those things are added in. Everybody starts at wholesale, and then those things are added in. On the broker side, we start at wholesale. We add in compensation for us doing the job, and that's how our rates are lower with no origination. So the first point is don't pay origination. Now, there are some times where it makes sense to pay origination, but you got to make sure you're getting the wholesale rate when you pay origination. So, or making sure from the consumer standpoint, making sure the lower rate actually makes sense to pay the origination. So that's number one. That's number one thing. The second thing I want to talk about is a couple of products that are available on the conventional loan side that people just are not, talking about. So Let's start with the Home Ready product, Hunter, and tell us a little bit about the Home Ready product.
Yeah, so there's 3% down options for conventional that a lot of people don't really realize that are there. Most people say, hey, FHA 3.5% down, it's the minimum that you can pay. There actually is a 3% down with conventional, and the benefit, there's a lot of benefits, right? Long-term conventional is a loan that you want to be in, unless you're in a VA loan, right? So out of FHA, USD, and conventional, your long-term goal is to be in that. So if you could start out in it, why not, right? And there's a lot of different factors, right? Credit score, things like that. But if you had realistically a 700 credit score, right, and a decent loan balance of 200,000 or more, you're starting to see those PMI rates decrease on 3% down. FHA can average, $200, $300 depending on credit score. It's pretty hefty, right? On a conventional, we actually had a 740 credit score and our PMI was $149 a month. They saved $150 a month just in PMI because they did have a better credit score and they put less money down. They put 0.5% less in down payment. That's a really big win, right? So it's not only getting into a short-term loan, but it's also preparing you for the long-term loan as well with no PMI in the future. So that's a really just kind of overall broad spectrum of it. You have Home Ready and Home Possible, and basically those are both Fannie and Freddie secondary market investors, right? But there's the biggest aspect of it that a lot of people don't realize is we can see if you can qualify off of the area median income. And that is something that an experienced originator is going to know how to discuss and do that with you, saying, hey, what are your focal points? Where are you looking? And then by calculating that income, we can kind of say, hey, this is what you can qualify for, usually within 5 or 10 minutes. And that is starting to say, hey, let's get you in the best track for you, right? Save a little bit of cash. Cash is king right now. Interest rates are up. The payment between 3 and 5% is very minimal. So it's just things that we want to help understand and help teach these new home buyers, especially first-time home buyers, getting into the market.
So specifically, how does Home Ready and Home Possible, does that save the buyer money? Is that better pricing? What do you see?
Yeah, so pricing is going to be a little bit lower of an actual interest rate as in comparison to something for 5 or 10% down, solely because it is, you're going to have PMI in factor, right? So you may see a little bit lower interest rates there, but the savings is really upfront, down payment, right? More than likely, 1 in 4 Americans refinance within 3 years of being in their home. And with interest rates being increased right now, we want to say, hey, let's keep cash in your pocket. Let's try to keep your payment as low as we can and your closing costs as low as we can, right? Get you to a home very minimally. And then a year or 2 years from now, let's look about refinancing and getting you a lower interest rate and maybe applying some more money towards the cost as well. And kind of seeing that there. So that's a really big savings just for down payment alone.
Sure. So Home Ready and Home Possible, you're saying are down payment assistance programs or help out with the down payment?
Essentially, yes. Right. So it's not a true down payment assistance where it really gives you money. That's where a lot of people say, hey, I need assistance for the loan. It's like, okay, well, if you qualify as a first-time home buyer, you have a lower payment. Now, they're not necessarily assisting you. They're assisting you with getting a lower down payment, right? But they're not giving you money like other down payment assistance programs. But this really is a big savings, and it's just a great product as well.
Sure. So now let's get into something where we do see the money dollar for dollar, the Borrow Smart program. Now, this is interesting because not all lenders are offering Borrow Smart. So tell us a little bit about Borrow Smart.
Yeah, so Freddie Mac Borrow Smart, there's not a lot of lenders out there that are offering it. And what a lot of people don't realize is it is basically federal money that is being given to the clients to help towards closing costs. You can get up to $1,250 or up to $2,500 in a grant. It is forgivable immediately towards your closing costs just by qualifying for Borrow Smart. It is also the 3% down payment program, so it's very similar to Home Possible and Home Ready. It's Freddie Mac's way of saying, hey, we have extra funds. We'd like to help people really find a way to get into a home and invest in their first-time home buying skills and allowing that to happen.
So that's great because, when we look at the Borrow Smart program, if somebody qualifies, for the Borrow Smart program, keep in mind, this is on a conventional loan, Okay. So if you're doing an FHA or VA or something like that, I mean, frankly, VA is probably the best loan product in the world. So, but if you're doing a conventional loan and you have to put, money down or something like that, this really helps out dollar for dollar. So imagine somebody that qualifies for Borrow Smart. Now you can reach out to me or Hunter, and talk about this Borrow Smart program. If you qualify for Borrow Smart, you have a buyer who, relative to, let's say a retail lender or whatever, who's not doing Borrow Smart, because these are actually funds that we don't know how much longer these funds are going to be around. Number one. Okay.
Correct.
These are federal funds that are being given to home buyers. And Hunter, you and I both work with, we have access to 40, 50 lenders. The list grows every day. I don't keep up with it, but we have access to multiple lenders, and not all the lenders that we have access to are actually doing Borrow Smart.
Correct. That's absolutely correct. Yeah.
So we have access to a select group of lenders who are doing Borrow Smart. So you have a buyer comes along, let's say they're buying at, let's say $300,000. And let's say somebody is charging them 1 point of origination on that loan, as we talked about earlier. So they're charging them $3,000 there, and then they're not offering them Borrow Smart. That's potentially $5,000 in funds additional that they're going to pay out of their pocket. So this is a really, really cool program, and something I didn't even know about when I was on the retail side. We've had our AEs educate us about this and how to save money. But it's really a cool product to get people into homes and help them out. So
absolutely.
Let's talk about another kicker here, DPA, or down payment assistance. Now, we have a lot of down payment assistance programs. Even as brokers, we have down payment assistance programs. You and I like one more than the others, okay, for very specific reasons. So let's talk about our down payment assistance program and how this works. So what are the highlights on that one, Hunter?
Yeah, so down payment assistance is tricky. A lot of people get into some pretty scary loans. And if you are really considering down payment assistance, I highly recommend you actually doing your research on what programs that are out there. Because I've seen loans that are not forgivable for 3 years, loans that are not forgivable for 5 years. If you refinance it, you pay it back. I mean, I've seen some really sticky situations, especially in 2020 when rates dropped. Everybody tried to refinance, and they would be stuck with whatever down payment assistance grant they had, and they couldn't afford to pay it off. They didn't have enough equity either to do that. So, but something to think about is rates will likely drop in the next couple of years. You need to have something that's going to be active for you, and it's going to be fast, and it's going to be either forgivable. One of the lenders that we get to work with, Equity Prime Mortgage, EPM for short, they have a 6 payment forgivable. It's 3.5% down program, which means they do give you the 3.5%, and after 6 payments, that goes away. Most lenders that we've seen are liens on the home, second liens, or not forgiven for usually 2 or 3 years. So it's a really exciting product, and they're actually pretty aggressive with their interest rates as well. I was pretty impressed.
Yeah, I mean, I thought I was looking at going to have an interest rate that was much higher or something like that, but really, the interest rates are kind of right on par for standard FHA rates. Now, this is a FHA loan, but you get the full 3.5% down, and really all you have to do is qualify for the FHA loan. Full 3.5% down. Hunter, you and I, many of the markets that we're seeing right now, the seller is giving concessions on the sale of the home. So potentially, now you can't go above the FHA limit on a purchase. So if you come to us in Texas and you say, "Hey, I want to buy this $800,000 home on a down payment assistance," not really the forte. But can't go above FHA limits. But really, this is a great product. If you have someone who's saving money, not quite there yet, but say, "Hey, I want to get into a home," we can put them in this product where they can actually help them get them and their families into a home. 3.5% down, full 3.5% down.
That's big time.
And then you can get the seller concessions, or you can pay your closing costs or what have you. And basically you really minimize the amount that you have to pay to get into a home. So there's a lot of options out there. Hunter, I mean, we've talked about origination fees. We talked about Home Ready, Home Possible, Borrow Smart. and FHA DPA down payment assistance from one of our lending partners. What are your closing thoughts here as we wrap up?
Awesome. Yeah. Closing thoughts are consult a professional, really have an understanding of what real estate can do for you. And a lot of it is short term, but your long term goals. If I could go back, and I think if any of us could go back and do it, especially those of us in real estate or mortgage, we'd buy a 4-unit property for 3.5% down on FHA. Hands down, my very first property, that is exactly what I would do, because it is an instant cash flow, right? It's helping you pay a mortgage on a house, but it's going to be forever cash flow, right? And that's what a lot of people don't see it. So, if you have questions about wanting to buy your first house or wanting to invest, if you already own a house and you want to invest, there's a lot of programs that can help you be really successful with both short-term and long-term. And we want to help you be financially successful. That is, I think, something that's much different, right? It's not just a transaction and a relationship and saying, hey, no, we want to build that relationship with you. And every single time you want to do something, we want to help you do it and do it the best we can. So I'd say consult a professional. Right now is the time to buy. Don't wait. You can refinance later, because our clients are winning right now. I mean, we had a client get money back at closing with a 3% down in concessions. That's crazy, so.
It's amazing, man, what we're seeing right now. And the media will tell you that, hey, different things are going on in the housing market. And we're on the front lines and we're seeing what's happening. And we're seeing people score some amazing deals and get into homes. You're seeing builder concessions right now. It is absolutely amazing. I do want to give one last point on that DPA program that we're offering. It is for a first-time home buyer. Okay. If you are not a first-time home buyer, then you can be a first responder, medical personnel, or an educator. And what was the other one? Was there another one, Hunter?
It's a veteran.
Or a veteran. If you are, if you happen not to be using your VA loan for whatever reason. Now, keep in mind, the VA loan is a better product than a DPA loan. Okay.
Absolutely.
But if you can go VA, always go VA. But the DPA program is a great product for our non-veterans. Awesome stuff. So there's a lot of money out there and money in the streets and great opportunities for you to get into a home and use different products that are out there to get into a home. So Hunter, Thanks for joining us, brother. I really, really, really appreciate it. I'm going to put Hunter's comments or Hunter's link to his YouTube channel and for his information in the description below. And as always, you guys can always reach out to me if you have any questions about anything we talked about. Talk to you soon, brother. Thanks for being here.
Hey, thanks for having me, man. Enjoyed it. Talk to you later.